I'm joined by Paul Schulte. He's head of multi-strategy research at Nomura International over there in Hong Kong. What does multi-strategy mean exactly?
We try to bash everything down and try to integrate all of the currency research and the credit research and the equity research together to make sense of the world, because in many ways currencies drive almost everything.
Doesn't everybody do that, surely?
Sometimes not.
All right.
Yeah,
okay.
not enough.
I had a guest yesterday saying that that's supposed to be emerging markets, also emerging market Asian currencies.
Yes.
And
yes.
Would you agree with that synopsis?
Very much. What's happening right now is that we have a world where Western banks still have extremely high levels of leverage, even though there's been a lot of deleveraging, which has been very painful. As that leverage comes down, leverage in the emerging world goes up. It's basically because the emerging world is safe collateral from the point of view of people who have high savings, corporates who have high savings, and governments who have very low debt. The opposite is true in the West. And so the shift in liquidity is happening right in front of our eyes right now.
So the New World Order basically is what we're seeing, essentially.
Capitalism is working. Liquidity is seeking out safe collateral. Safe, unleveraged collateral is, ironically, for the first time in a generation in the emerging world. This is what's
That's
going on
because they
right
save
now.
and we don't, essentially, as well.
That's right. They saved and we don't. The governments were coming out of the Asian crisis. Brazil was coming out of its own crisis in 2000. They were on their back when the West was trafficking credit products. They were in the rehab as the West was trafficking credit products.
Right. Well, let's talk about what these countries should be doing here. I mean, one of the things is that people would say that they do so well because their currencies are so, well, they're so devalued compared to what they should be, and they should be allowed to float freely, and that's no more true than any other country than China. What do you think?
Well, that's true. That's a very good point. What's happening here is that Bernanke has told the world that we will keep rates in the U.S. very, very low, and all of you guys in the troubled parts of the emerging world, which is Eastern Europe and the Balkans and the Baltic countries, can leave your currencies fixed, and you can reflate your assets and save the European banking system. Asia and Latin America don't need this. Asia and Latin America have safe financial systems, and China in particular. The best thing China could do would be to have a one-off large revaluation of the currency, but they're not going to do it. The result is going to be an ongoing increase in asset prices domestically, because they have to keep on buying currency to keep the currency from going up, and so that's going to be a feature of 2010.
You don't see any move on that? Not even a widening of the band? I mean, it's been flat for, I think, since 2008 now.
That's right. That's right. The currency year-on-year is flat as a pancake. I've just had about 250 meetings with investors, and these people have a lot of contacts all over the world, and nobody I've talked to said that anybody in the Chinese government is remotely considering the chance of a one-off large revaluation, and so we have to consider that asset revaluation is going to be the name of the game for 2010.
Also, you say asset revaluation, are you talking inflation here?
Well, that's right. Asset inflation and probably a return of CPI, which we would like to have because we've had deflation in China all year long. Inflation is returning. We are looking at about 3% next year. There is some risk of it rising faster than that. But the problem is, if you can monkey around with interest rates and reserve requirements, but our very strong belief, multi-strategy, this is coming from the currency. It's not coming from loan growth. And so if you don't attack the currency, you're not going to solve your problem. The currency is creating too much momentum on the upside for asset inflation.
Paul, 5 seconds. What's your top tip next year?
Our favorite bank in China would be CITIC Bank. The banks to look at also in Southeast Asia would be the Indonesian banks, BCA and Mandiri.
Paul, thank you very much indeed, and have a great new year.
Yeah, thank you so much. Appreciate it.
Paul Schulte there from Nomura International over there in Hong Kong.